Good day, everybody, and welcome to our webinar where we're going to discuss automation of loan origination using process and decision service. For this webinar today, we have the chance of having with us Brian Stuckey from Quicken Loans and Mismo to guide us through the first end of this presentation. So Brian, all yours.
Thank you, Denny. Delighted to be here. Thank you all for joining us this morning. It's April Fool's. Hopefully there is nothing in here you'll have to worry about in the presentation. I think we've all had enough tricks for the past year. So we'll just try to give some good information out and hopefully give you some useful things you can take back to your organizations. Quick introduction to myself, and I won't bother reading all of the text here for you. As Denny noted, I'm currently at Quicken Loans as part of the Rocket Mortgage Technology team. And I am actually leading a team working on ethical artificial intelligence. I am a tech guy first. My degrees were back in artificial intelligence and computer science back in the day, but I have been really focused on the mortgage world, the financial services world for now over 20 years in applying technology there. And rules, decisions, process have been the primary area of expertise where I have focused. The other thing I wanted to mention that Denny noted here too is that I'm active in the Mismo organization. If you have not heard of that, Mismo is the Mortgage Institute of Standards and Maintenance Organization. They are basically a standards group composed of mortgage experts that have been putting together standards, first with data, and now moving into other areas to facilitate transactions, cooperation, and coordination across the mortgage industry. In that organization, I co-chair a work group on decision modeling, and I'm also, starting this year, a member of the Residential Governance Board. So I wanted to really preface this presentation with the whole notion of a digital mortgage. Our running joke, not so funny anymore in the mortgage world, is that every year the digital mortgage is still 5 years away. It's that elusive unicorn that we're after. And what that really means to us is getting to a point where we have a fully, completely automated digital system in place. No paper, no humans. Everything is automated from beginning to end of the process. We have, without a doubt, gotten closer over the years. A shout out for Rocket Mortgage. We've done particularly well at this. The industry as a whole is not there yet. We want to be able to give the borrowers what they want, and that's quick answers, quick loans from application to actually getting the money in their bank to move forward on their purchase. And there's a lot of distinct parts in that process, and we'll talk about more, and that's what adds some complexity to this problem. So, as it turns out, the pandemic a year ago really shone a spotlight on some of the glaring holes and weaknesses we have in the pursuit of a digital mortgage, and certainly exacerbated this problem. As an organization, Mismo got together to try to take a look and see where are the real issues going to lie and what can we do to help it. Now, if we put aside the issue of forbearance, which was essentially having lenders either temporarily pay your mortgage at a lower rate or perhaps cease payments for a while to pay back later, what else can we do? I mean, we know we've got places where the humans are still very much in the loop, quite often with the initial broker or loan officer you might talk to, doing appraisals where historically an appraiser has come to the property and come to your house to make an assessment of its value. Closing, when we are doing the final procedures, and if you've ever gotten a loan in the US, you sit down and sign through a stack of papers that's probably about a foot tall and then stored away somewhere never to look at again. Those are issues when we are suddenly in quarantine. And the demand was as great, if not greater than ever. Rates have been historically low. In fact, the article we snipped at the bottom of the slide here was from just over a year ago. Some lenders turning away borrowers. That shouldn't be happening. Demand is there. We're non-digital. That's a problem. The mortgage industry has certainly had, we're kind of describing what's going on now, but over the years, there are several long-term characteristics of this industry. We have always had lots of rules and lots of guidelines. And this is in addition to the things you're probably thinking about with traditional sort of underwriting rules that are going to look at a person's income and debt and see the kind of loan they're looking for and make a good estimate of if they are in fact going to be able to pay off that loan. We're buried in regulations, compliance. This got much more significant after the mortgage crisis in 2008. So we have regulators, we have federal policy and organizations, we have state guidelines. State guidelines in particular make the closing aspect difficult because there are 50 different state guidelines. There is not one. The GSEs, the Fannie Mae's and Freddie Mac's of the world, if you're going to, as a lender, sell that loan on the back end to a GSE, there's a whole nother rules you must follow. And then get to think about the rules around just a competitive advantage. I want to be able to offer products to beat my competitor. I want to see when it makes sense to lower rates. And sadly, this is a world of acronyms. So we have things like Truth in Lending, the Real Estate Protection Act, Truth in Lending, lots of regulations, and they change frequently. We know annual changes that happen. We know some quarterly updates that happen. Pricing information can often change on a daily basis, and actually it does change daily and can be changing by the minute. That's what we know about. Then we have the unexpected or unanticipated changes. The pandemic was certainly a big one. Maybe we have to react to a competitor. Maybe there has been a certain region that has fraud occurring and we've identified a pattern to have to account for it. All this points to the fact that we must be very, very agile. Consequently, this industry in mortgage was one of the earliest adopters of business rules and expert systems. I think this and insurance were the two biggest industries to latch onto it. And it's been over 25 years, I think, since Countrywide Loans, Countrywide Mortgage, developed a system called Clues, a countrywide loan underwriting expert system. And they use it at a variety of places, and nearly every other major financial institution and lender followed suit to do origination, to do underwriting, closing, pricing, loan recommendation, compliance, all over the place. And we had more and more evolved platforms on which these institutions could write their rules. The whole idea of the business rule management system was simply that we're going to extract the logic from the core application, represent it in a business-friendly way, and then be able to manage it independently, hopefully by business users from the rest of the application so we can manage the chain there. And they use terms like total business control and zero time to market for making agile changes because the platforms allowed it. Great ideas, fantastic things to go and seek, but I don't think we ever got fully up to that promise. Why did that happen? Well, first, it ended up being that only the richest were going to be able to do this. These platforms were increasingly complex and increasingly expensive. So mid and lower tier lenders could never afford it. Because they got more complex, you often needed specialized resources to be able to work with them. So you added on even more money. And I think a few years ago, we saw some statistics that said larger lenders were spending 4 times more per loan than smaller ones. They could afford it, but it's because they had these custom solutions in place. The other issue that really prevented us from this zero time to market and total agility was that a lot of places were hesitant to move away from their traditional software development lifecycle. They wanted the same design, architect, develop, test, deploy, and not allow that real minute-by-minute change. And I think we saw numbers there that said something like 60% of the companies in financial services using business rule management still use their traditional life cycles. So the agility aspect wasn't really realized. So I'm going to argue to you that process approaches are not only part of the solution, but these approaches really are, in fact, the solution. This industry suffers from a whole lot of other ones, and this is the elephant in the room that nobody wants to point out, but we get enamored with whatever the newest, shiniest technology toy is. Blockchain has been, the latest for the mortgage industry as the answer for everything that ails us. These things all have great value, and they're very important, and they have fantastic and important uses. However, I think that we need a foundational approach, and these standardized approaches to look at business process, at case management, and decision management allow you to build that foundation when you can really start to employ some of these other newer technologies. I hope you're familiar with all of these. We'll certainly talk a little bit about more of two of these today, but BPMN, which is focused on processes, really structured transitional kinds of work, case management, where you got cases or events and an unstructured type of activity, and then DMN for decisions and rules. It's kind of the foundation, the balance point, or the glue. These are all complements to one another. These are languages, these are tools. They aren't solutions in and of themselves, but all critically important. All right, so what does that mean for us in terms of an approach? Well, these approaches that I just referenced get back to the idea of being able to enable business involvement, if not business control, with a real visual approach to the creation and the modeling that needs to go on. And you can literally have business and IT resources working from the same place in the same page. And that's immensely important. The problem that has persisted for far too long is that business analysts are writing requirements, throwing them over the wall to technicians that are very adept at their coding jobs and their capabilities, but maybe don't understand the business and either have to interpret themselves what the requirements say or go back to ask questions. This gives a canvas that both sides can work on. It really facilitates that modeling process and enforces a whole rigor around the methodology, and that is tremendously important. Simply being able to fully model out your processes, your decisions is invaluable, and far too many places haven't done that effectively. The other benefits you get from something like DMN is that what you see is what you execute. There is no translational piece that happens. That's the code. So that aspect that has previously been a problem goes away. We also have very easy modification and deployment with these techniques. Again, those getting back to that idea of zero time to market and being incredibly agile, which this particular domain requires. It eases testing and regression analysis, and you can really quickly deploy to impact only what changed and not have to rewrite your entire application, and that's critically important. One of the things we undertook in MISMO was along these very lines, and we've been creating what's called the Life of Loan, which is basically a fully developed business process of the complete mortgage life cycle, from initiation to a closed loan. There's a whole separate life cycle in here that deals with serviced loans as well. I think what you will find in many places, and it's certainly true in the mortgage world, the process part of these activities is usually pretty stable. They just don't change or change very little. What changes are the rules and decisions underneath them. Those change constantly. we don't want to have to go rewrite the entire application, including the process, if that's not where things are happening. Identify the decision points that happen within that process. I isolate the areas of volatility so they can be managed independently of the rest. Go to the next slide. As we drill down through here, that's exactly what we have started to find out. We can take that underwriting piece a step down. We get down to a lower level of process. We can start to see, okay, here's more process steps that take place. Where do I get to the underlying underwriting decision? Here it is. And then at that point, as we move to the next slide, we can finally be able to go through and write the decisions, write the rules, and execute it, write it, and manage it in one place. That's a perfect place to go through to see the demo of what this looks like. So I'm going to hand control over to Denny to show you just that live.
Thank you, Brian, for this great introduction. So let me show you a little bit of the capabilities that Brian's been talking about. So here I'm looking at the DMN decision requirement diagrams. And this is a visual way to capture how to make a decision. In this particular case, I'm looking at a loan pre-qualification decision. And basically the boxes are decision, the oval shape are input, and those clip box are what we call business knowledge model. They're external logic that we reuse among this. So you can clearly see here that to do a loan pre-qualification, I need to do a decision on the back-end ratio, a decision on the front-end ratio, and a decision on the credit scoring. In return, to calculate the back-end ratio, I need the applicant data. And for the front end, I need both the applicant data and the requested product. And for the credit score rating, I just need the credit score. So this is a visual representation of how things are decided. Now I can go into the details on how the decision is made. And you can see here, I have a decision table that basically reads like rules that says, if the credit score is poor or bad, I don't care about the back end, I don't care about the front end, you're not qualified because of credit score too low. And you can read each row as a rule like this. Now, the beauty of this approach is that it can be easily understood by subject matter experts and easily changed. And then you can just simply, in one click, publish this as a decision service, and this becomes an encapsulated service that you can execute. So now I can go in the library, look at that decision service. The documentation is here. I'll get back to that. And here, right from here, I have many different endpoint, REST endpoint, and I have a try it form here. I'll just remove some of the description so we can make it easier to read. And then I can actually go through. So I'm looking for a standard loan, a rate of 0.25, term of 360. I'm looking for 350,000. I'm D, I'm 41 years old, male, employed. I am an existing customer, and I'll just enter here the score, the credit score. And if I run this, then I get the result that I have a backend that is insufficient. I have an excellent credit score rating, a front row that is insufficient, and therefore I'm not qualified because my debt to income ratio is too high and my mortgage payment to income ratio is too high. So now you can see that going from a visual model and simple logic capture, I can turn this into an executable service. Now, as Brian was talking to, we can actually orchestrate this into a larger logic. And here you can see I have a BPMN model where I'm stepping through the logic of the first step is to call that loan pre-qualification that we just saw, but then if I'm qualified, do some more bureau data collection for bankruptcy, do a decision on routing, whether it's directly accepted, more documentation, or decline. And similarly, I can do exactly the same thing, is that right from here, I can publish this as a service, and now it's creating me another service that this one calls the service of the pre-qualification that we created. And I can again just run this service. So D41 male, 25, 350. If I run this, I know that I'm not qualified because I get at the pre-qualification, I'm pushed out, as we saw. But let's see if, oh, didn't enter this. So let's say he's making 6,000. He's doing 600 of repayment. I'm just entering some data here to test the service. And I run the service. And then I'm not qualified because my mortgage payment to income ratio is too high. But let's say the person would be making $7,000 in revenue. Then if I rerun this, then you see that I'm still not qualified on this for different reasons. So as you augment this, then eventually, you know, somebody with more revenue, I could have run this, and I'm not qualified at this point. So this origination, so this is going through all these steps and taking me to the different levels of this. So with these tools, with these standards, it's possible for you to visually capture the logic, call other services, involve human in the loop, make different decisions, and run these as service endpoint. So I won't go into any more details at this point and pass it back to my friend Brian to continue with the presentation. Back to you, Brian.
All right, thank you. We'll just give you a couple of thoughts here moving towards the future with these technologies, and this is the part that always gets me the most excited, and we'll just touch on them briefly. If you can go to the next slide, Denny. One of the real powerful things that we can move forward to is looking at putting together standards from different places, because that really ups the ante for what we can do. To that end, through our work in MISMO, we formally approved and adopted DMN as the recommended, suggested, and approved approach to representing, executing, and exchanging decisions in the mortgage industry. That was one of the first non-data standards that MISMO formally approved. I expect sooner than later we will do the same for BPMN. The interesting part here is that you will see both in the MISMO charter and the DMN charter notion of the word exchange to facilitate exchange between industry partners. And we can get a lot closer to that when we combine DMN with something like MISMO. So take a technical standard with a business data standard. And to that end, we have been able to take the entire residential XSD from MISMO, representing everything that goes into a loan, all of those data elements, create a DMN data model from it, and then we can write decisions using that same feature set as the attributes in it. Now, what does that mean? Whatever we write could be completely, totally shared across industry partners that rely on those two standards. There is nothing that needs to be interpreted or translated. They are not bound to any particular platform, only have ones that are reliant and use, or I should say, compliant with those standards. What this can open up in the future is this whole idea of a digital decision library. And I know Trisotech's done some fantastic work with this in the healthcare field. MISMO's looking at APIs now as well. If you have a uniform approach to building out decisions and process where we've combined a MISMO data standard and OMG, DMN, and BPMN standards, write the building blocks to support these applications, to give the automation to the places where perhaps they are still too human-based we can create these libraries that allow you to build full applications out, have them managed at one place, deployed out everywhere. And I really think that's where the future is going to lie, and the potential there is tremendous. I can usually babble on about this for a good 30 minutes. We want to be sure we can give you all time for questions, so I'll stop that one after that slide.
Okay, so we'd like to entertain any questions. If you have questions in the GoToWebinar application box there, you can enter your question, type them in, and both Brian and I will be happy to answer your questions. So while people are typing in their questions, Brian, maybe you can talk about the vision of how MISMO is looking to integrate BPMN and DMN right into the core of their standards. Trisotech is a big participant in the MISMO group. Maybe you can give us some insight into that.
Yeah, what we are building out right now in MISMO, by taking that entire life of loan, which has now been pretty much completed and out in BPMN, as a next step, we can start to identify the decision points throughout there to build out libraries of common decisions where they are needed and isolate exactly where they should go. By having that process drilled down to a granular level, we can get down to the core part of it. And we've got another group that is working on APIs. So this can be then perhaps behind some kind of a standard interface that would really facilitate our work going forward. That's something that the mortgage world has asked for a long time, and we have not had.
Okay, thank you, Brian. There's a question here on how could that be deployed on a bigger scale? I guess I'll take this one. So fundamentally, each of these decision and process services that I was showing, these are really microservices that can be containerized at the single decision or the single process, which can then be deployed at large. It is also possible to have multiple instances of this execution available at different endpoints. So you can scale both horizontally and vertically with the approach. Another question here is, can you automate fraud detection? Brian, do you want to take a first stab at this? I know you're doing a lot of work right now around ethical AI.
Yeah, fraud is an incredibly tough issue, but I think it's one well suited for these processes. And the thing I've seen most often is a lot of places have got a book of patterns that are suggestive that fraud could exist. That's the kind of thing that I think DMN can easily be used to go through and process a lot of volume, looking through the data and the information and say, I see a pattern here, let's take a closer look. That next step may still require human intervention because of the difficulties in identifying fraud. I've seen some other work that's gone on from some other places where they can look at real-time transactions, so something like PayPal, and very quickly, notice a series of transactions over a short period of time that would be suggestive of it. Sometimes in the mortgage world, it can be more subtle. They usually make a lot of sense after the fact when you look and say, of course that's fraud, and as they're coming in, maybe not so much. Frankly, I think it's really a combination with these kind of approaches. Machine learning can be a huge help to help identify the patterns or give you more of a clue to it. Decisions, machine learning, mathematical optimization, those things all together are really, I think, what gives us AI. And that's likely where the future of full fraud detection will lie.
Yeah. And the benefit of this approach is that you can orchestrate all these different model or decision as inputs into a single model. So you can use within the decision, call a predictive model that will tell you whether it's predicting this as a potential threat. And then you can, within the decision, look at other aspects and combine this to make a decision of whether this is a possible fraud and for what reason. And the benefit of that structure around the predictive model is that you can actually provide a reason of why, just like I was showing in the demo, where there was a reason of why the underwriting for the loan pre-qualification was accepted or not. That's unfortunately all the time that we have available, and we want to be respectful of your time. If you have more questions, please feel free to reach out directly to Brian or myself. Our emails are at the bottom here on the front page. Thank you very much for your time. We appreciate it. Have a great day.